Good afternoon, friends. March 26th, here with the Daily Opportunity with Jonathan Geck. I want to apologize. This video I had hoped to make a couple days ago, but as many people are, juggling kids at home and trying to figure out the new routines amongst a total economic shutdown, essentially, it's been a little difficult. I'm sure people have challenges all over the place. So, but today is actually a great day for this video. What I want to talk about is the S&P 500 history and what that might tell us about where it's going right now. Recently, there's been a lot of prominent figures on TV, even all the way up at the very top of the government, stating that, you know what, we're gonna win this war, and once it's done, everything's gonna go back to normal. The stock market's gonna go back to where it was, probably better. I've heard some people say it's gonna go even higher. I would be skeptical of when you hear people talk that way, and there's a couple reasons, and I want to talk about that today. The stock market in 2019 was probably the most overbought it has been potentially ever, but certainly in a long time. And when you get to a point of being overbought, meaning just kind of heading straight up, at some point there has to be a correction. One of the great individuals I follow is Al Brooks. Go check out him and his website for more information. He's got a great newsletter that he puts out. He said that the stock market was basically a bomb because of how overbought it was built, and it just needed a fuse. And he had been saying that for a while, and of course a fuse came along. Now, the coronavirus is one heck of a fuse, but it could have been anything else. It could have been some other black swan event. The stock market needed that catalyst to then create the pullback that was bound to happen. So let's talk about that. We've got some cool charts to look at. Macrotrends.net is where I'm going to be stealing some charts from. Check them out. You take down my video. See, I'm starting to get a little better at this. So this is the S&P 500 over, I guess, basically the entire history. Back here in 1928. I'm focusing on the S&P 500 because I think it's the most relatable. It's the stocks that you think about when you think about big companies. And so, as you can see, since the beginning, it's been doing a great march upwards. If I click this button for inflation adjusted, that kind of at least brings it into perspective of today's dollars. So I'm going to keep inflation adjusted on. And you can see, since back in March of 2009, where we hit a really low, we have been on a really good climb upwards. Times have been really great here in the United States. And then right here at the peak, January 2020, that's when the fuse lit the bomb, so to speak, that then created the large pullback that we're in. Now this week, the last couple of days, we've seen the stock market rally a bit. It has come up in part because of the large historical amount of money that our government and Federal Reserve is pumping into the economy. I expected the stock market to be dropping farther for a little while longer, but I also didn't expect a historic, some were saying, $8 trillion worth of pump into the economy. That is bound to make the market go up for a little bit. No question about it. Did we hit bottom? That's what we're going to look at here. So let's go back and think in times in our history when the market was this overbought as it was in 2019. One that comes to mind is the dot-com bubble, 2000s. You can see that here. It had this huge meteoric, just Everest rise to January of 2000-ish. And then it fell off that cliff. We also had the Great Recession in 2007. You could see that it had a good rise and then came back down. And then back around when I was born, I think there was something going on in the 80s. But I'll be honest, that one I am not as familiar with. So if you think, okay, if the market was the most overbought it's been, or at least as overbought as it was in 2000, let's take a look at that era. So 2000, we had a crash. How long did it take for the market to get back to its 2000 highs? We did not break back above our highs from 2000 until almost 14 years later. A good financial friend of mine says that they often refer to that as the lost decade, when 401ks essentially did not make great money. However, as long as you were investing all the way through, you saw some great returns showing up over the last couple years, and that's the point of a 401k. So you've got to really think, if we were that overbought, did we just find bottom, or did we just find a bounce because of the $8 trillion that got pumped in? Now let's also click this box, show recession, and I think this is really neat. So you can see here our Great Recession, which was a longer recession than past ones, took us down to a bottom. But that took a while to get there, and then a while to even get back up to the top. So that one, 2007 to 2013 before we reach those highs again. So you've got to think, what is happening right now in our economy? Absolutely nothing. The bounce we're experiencing this week is predictable. We don't know the extent that companies are going to start to collapse. There are large companies with a lot of debt on their balance sheets. So the question becomes, can they weather the storm, and how long will this storm be? I would have to think out into the summertime, where, let's think about consumption. Are vacations going to be happening this summer? Most likely not. What about employment? Well, we've seen an extreme spike in the employment numbers as restaurants have shuttered, as businesses start to close. Those might come back. However, it is not something that usually comes back really fast. This is not something that, in my opinion, I could see us recovering from. We will likely still be talking about this Christmas time towards the end of this year. I don't know what's going to happen. I could be wrong, and I really hope I'm wrong, and that would be amazing if we bounced and just kept on going higher and higher. History here on the chart would tell us otherwise. So as you're starting to think about your changes you're going to make to your 401k, or oh man, did I just miss the bounce, or I'm going to put some money in the stock market, think back at history and think, is now really the correct time? Now, if you have been investing the dips, and all of a sudden, because of this $8 trillion, you have a profit in your brokerage account, I would recommend, and this is my opinion only, take those profits. Nobody goes broke taking profits. Nobody loses money when they take their profits. So take a look, make the decision for yourself, and then keep doing research, keep learning. This is a great learning opportunity. I am famous for having bought GE during the Great Recession, and famous in my own mind, but famous for buying GE in the Great Recession and then being able to buy my current house. Famous for buying Tesla when it was really low, and then being able to buy a new car when it went up. So I've had some experience playing some of these dips. I can't say that I'm like an expert, and I'm not expert. I'm not licensed. I'm always putting that disclaimer out there. I don't know what to do with your retirement accounts, but I hope this type of information gives you something to go on, gets you out there researching for yourself, and helps you make some decisions for yourself. Have a great one, everybody. Remember, seek that opportunity every day. Spark some joy. Adios.